in 2021, Keith and I, when we were all facing the same thing, going, what's going to happen? We thought home builders were going to shift to bunkers and like bomb shelters for everybody.
Don't laugh.
Ammunition sales.
Down payment would be freeze-dried food and ammunition.
I think there's a luxury market for that now, actually. Yeah.
You talk about it privately. We talk about it publicly. This is the Real Estate Insiders Unfiltered podcast. Welcome again to the Real Estate Insiders Unfiltered podcast.
Yes.
I'm your host, Dwiggy, along with Mr. Crazy Uncle Keith.
That's me.
By the way, we had a good one today. We had Jim Tobin, the Chief Executive Officer for the National Association of Home Builders, and Ken Wingert, the Chief Advocacy Officer for NAHB. A little bit outside our normal realms. We're bringing new construction to this, but we got the best of the best on the show. It
was great. I mean, look, they're in the belly of the beast and trying to create and affect change. We talked about their thoughts on affordability, how home builders can help it, what tariffs could mean to new home construction. I had to ask him what it's like in the room where it happens, and we got some fun answers to that. We also dug in on just like the lack of innovation in the new home construction space and how this could be the time where maybe we start to see some different things come to market, but just a really robust conversation about residential real estate writ large, and then down to the specifics of new home construction, new home builders, and how they can help with some of the problems we're facing. It's a great conversation. You're going to dig it. Put it in your ears, kids.
Gentlemen, welcome to the show. We are very excited to have you both here today. I think we can all agree it is an interesting time in the U.S., especially for real estate builders. I know that Keith and I want to talk about tariffs because why the hell not?
Sure.
So
it's Tariff Eve. This is being recorded on Tuesday, April 1st. So happy April Fool's Day, even though you're listening to this not on April 1st. And it's on the eve of tariffs. So we'll probably talk about that.
We have a lot of questions, and we're grateful for you both being here. We know you guys have busy schedules, but certainly there's a lot of stuff happening in the economy that we'd love to get your take on. And I know our viewers and listeners would as well. So Jim, let's start with you.
Yeah.
Quick couple-minute backgrounds. You're at the top seat of the National Association of Home Builders. How did you get there? And then Ken, we'll come over to you as well. So.
Well, thanks for having us, James. Dwight, thank you. Oh, sorry, Keith. Oh my God, can I start over again?
No. Let's go with that.
Sorry.
Don't worry, I've been called way worse by a guest, I don't know,
so
we're good.
Where that came
from. That's okay.
It's been a long day already. How's that?
All good.
So again, thank you both for having us. So I'm the CEO of the National Association of Home Builders. Almost 2 years into the role here. Started in the fall of 1998 as a line lobbyist, came right off of Capitol Hill after working a couple stints up there for a couple members of Congress. Decided that I was tired of looking for a job every 2 years as previous boss was lost or retired. And in my career, they kept paying me and they kept promoting me over 26 years in NAHB. But I was a lobbyist. I grew up on the government affairs side here and, went from kind of generalist to do policy my policy background was environmental and then taxes, and then ran the government affairs shop at NHB for a decade. And then when the CEO opportunity popped up, I said, that's what I wanted. My career arc was less in advocacy, and I really wanted to get into association management and more strategy and thinking about things from a 30,000 foot level, and was fortunate enough that the members chose me to lead the association. So grateful to be here and represent an incredible industry and incredible men and women of that industry and a really important part of the U.S. economy.
Massive. I have to ask just as a follow-up. So you were here through 2008 and 10. Keith and I were too, to be clear. We were running very large real estate companies at the time. We met over a large amount of vodka in 2010.
Accurate.
It was an accurate story. We're obviously in an interesting time now. Is there correlations between sort of where you were back then and today that you feel like some of those? I mean, they're different times, but certainly we're still dealing with lots of issues, but differently. Is there any correlation between what you learned back then that you brought into the position today?
Yeah, I mean, some of the things we tried in the Great Recession to rejuvenate home building weren't great ideas. They look good on paper, but in practicality, they didn't do. In 2008, the bottom falls out. 2009, how do we? No one knew how deep and how broad that recession was going to be. So we tried to put policies in place to spur more home building and get people back into the market. All it did was take people that were already going to buy a house, and it just moved them forward in their economic cycle. It didn't spur new builders. So, when we hit the COVID recession, again, not sure how long that was going to go. That was more akin to that Great Recession.
Sure.
We threw that idea out, like this idea of let's create a tax credit for people to come into the market. We knew it wasn't going to work. And of course, different challenges in COVID. Who would have thought that the housing industry and home building in particular would kind of buoy the whole market, or the whole economy? So, there's always lessons from all this, but having been through, the mild 2000 recession, and then of course the Great Recession, then the COVID recession, now here we are in kind of this weird policy space that, we're watching the stock market tank and what our economic feelings are, there's always lessons you can learn, but completely different scenarios.
In 2021, Keith and I, when we were all facing the same thing, going, what's going to happen? We thought home builders were going to shift to bunkers and like bomb shelters for everybody.
Don't laugh.
Ammunition sales,
We're going to start
peaches,
trading.
and bunkers.
Down payment would be freeze-dried food and ammunition.
So you're all
there's a luxury market for that now, actually.
There's some woman here in like Fairfax County, Virginia, where I live, who just got busted for building a bunker, like a 24-foot bunker under her home, and finally got the permits. And I said, finally, she understands what it's like to have to be a home builder and go through the permitting process. But if you all know our International Builder Show we host every year in Las Vegas or Orlando. There was a whole outdoor section on bunkers, giant corrugated pipes, how to build that. There was a time where that was very in vogue.
That is funny. All right, we'll come back to that. So Ken, talk to us. You've had an interesting stint as well in the advocacy side. I saw you've worked at NAR, Zillow, and now here, and you're the chief advocacy officer. So tell us about that roadmap. You been also in politics, looks like your whole life as well.
Well, I grew up in Iowa, which is a great place to be from if you want to get into politics. So my first
Why?
My first
why?
was in the caucus. Long live the Iowa caucus. But working for then a young governor from Texas, George W. Bush, who decided he was going to go to Iowa and run for president. But along the way, I took a little different route than the traditional, like Jim, go and work on the Hill. I did a lot of campaigns in my misspent youth, and one of the post presidential was on a congressional race in Iowa, and the Associated Builders and Contractors actually came in and did independent expenditure ads for the candidate I was working for, who ended up losing, but that set me on some trajectory into the construction and housing world, working for ABC and then for NAR for almost 14 years. It's where I met Jim through the. I think I started lobbying in the fall of 2006, so I got all of about maybe 9 months of the heyday
before the world ended,
before everything went to crap, and then transitioned over to Zillow. Had a great, had an interesting. I was there for the iBuying days. I was there for COVID. Got to start their DC office, which was a really fun project. And working for a public company with a brand like Zillow was really a great experience. And I was doing some multi-client work after that, and Jim had become CEO and had this chief advocacy officer job out there, and I said, wow, I'm like, that's like the perfect position on that career arc, and he was dumb enough to hire me. So here we are.
Everyone's good for one mistake a year.
It's 6 months. My 6-month anniversary was yesterday, so fortunately didn't call.
He actually is going to have a conversation with you.
I've made it 6 months. Haven't really decorated yet, but I've got the branding, so we're
Yeah, if your email's turned off after this podcast, you know why.
Right.
Yeah.
Hey, so Ken, a follow-up on that, just real quick, because you mentioned Zillow. I'm assuming you were there when they first launched their advocacy efforts in DC, which was controversial. to say the least.
Really? Why? Expand, James.
Why, James?
Yeah.
What was that like? And I guess my question is, how did that? I have two questions on this. What was that like to work with a company starting to create that, where they're trying to influence policy? But more importantly, how did that operate with NAR? Like, especially if you being working there, like, what was that like? Just
Yeah, it was. I think people misunderstand the relationship between NAR and Zillow. I think it's progressed throughout from back.
Sure.
I was at NAR when Zillow first came on the scene, right? And everyone completely freaked out.
minds.
Thought that agents were going the way of travel agents, which obviously has not happened. And really being inside, I mean, Zillow views agents in the industry writ large. They do a lot with our new construction stuff as partners. I think it was met with some controversy because it was almost as if a company there was the suspicion that we were standing up a shadow trade association, which was not the case. We wanted to go out and advocate, obviously, for business interests, which is what companies in Washington do all the time. I think tech learned a lesson early on from back to the Microsoft days in the late 90s to be in DC early and build relationships before you need them. And so we really used the economic data, the econ team, kind of the marketing heft and the brand of Zillow to get in the door and tell not only our story but the story of home ownership and where we needed to go, at least from our viewpoint on housing. And so I always tell people we aligned with the industry on probably 95% of the issues. There were a few we disagreed with, but we were usually at the same events and the same hearings with NAR and NAHB and all the other real estate trades talking about it. But standing it up within a company, I will say, the execs, Rich Barton, everybody on down was super supportive. They got it. They invested in it. We stood up a PAC, which we had, which was at the time kind of tough in tech world to do. But they supported it, and I think they're better for it. And you see some of the other companies. I know Rocket's been in the news the last couple of weeks.
What?
Big companies?
They haven't bought anything lately.
And they honestly were part of the model, right? They've done it. I was there when Rocket first started. First showed up in DC. And to see where they've built their operation. So it's interesting. Corporate's a different viewpoint from a lobbying standpoint, because you're kind of company first and
sure.
and then the industry as a whole. But at the end of the day, we all want a thriving real estate market. We all want people to have a place to live, and we may have different paths to get there, but it's the same end goal and the same objective. So.
Interesting. I can only imagine some of the conversations that you guys have had along the way to get everybody aligned.
Is the statute of limitations up on any of the conversations you've had that you can now share? Or not really? No? Don't get fired. Don't get fired. We'll move on. You want me to take the first question,
Yeah, take the first question, Keith. Right. Go with it.
This could be for either one of you. I guess I'll sort of direct it at Jim, but Ken, if you want to jump in, that's awesome too. Affordability is something we talk about a lot as we sort of center on the residential resale space, but it's a struggle. I have opined on this podcast many a time about how I'm worried that we're going to miss an entire sort of generation of future trade up buyers, and what will that look like for the residential resale industry? And it's bad, right? Affordability. We've had, you don't need me to tell you, all the stats. So supply side gets talked about a lot. That's where you all and your advocacy comes in. Everyone seems to have different numbers on how short we are. I'm curious what yours is on supply. And then, how do we really increase the supply? What policies do we need to do? I know, can we do federal policy for things at a local level? How do we really solve the supply side of this affordability problem?
Yeah, Keith. So I'll get our chief economist. So our estimate is about 1.5 million units short. I know that's on the small side compared to some of the other estimates. It's just the way we kind of calculate them, but we think we're 1.5 million units short. And the only way we're going to solve the affordability crisis is to build more housing. I mean, plain and simple. We have not, the drivers of home building are household formation, immigration, and replacing the older housing stock. And at this point, the housing stock has never been older because we're just not building enough units. We talked at the top about coming out of the Great Recession, since 2009 or 10 or 11. By the time we kind of really got on the other side of it, we just never really built to trend, which is about 1.5 million single family and multifamily units. Been pretty short, and that's where the gap comes in. We're close. I mean, we'll probably build 1.2, maybe 1.3 this year, with 1 million of those being single family, maybe 200 or 300 in multifamily. Multifamily still struggling to come back, after the inflationary period and interest rates. But interestingly, you talk to our members, and they're busy. Some would say they're busier than they want to be. Certainly busier than they should be, given where interest rates are. Right now we're about 6.5%. We kind of cycle peaks. We're, over 7, just recently we hit 7 again. But that's because, the existing market's completely locked up. Speaking for myself, I'm sitting in a 2 3/4. Guess who's not buying a house anytime soon?
Right.
Come on,
and until we solve that problem, new home construction is the only game in town if you want to buy a house. And, whether you do or don't, given the economic uncertainty is a different story, but some people have to buy homes. There's a job opportunity, life changes, those kind of things. So, sorry to interrupt,
please. But how much of that is the builder's ability to buy down rate, right? If you've got 200 properties or 2,000, whatever your number is, you can sort of feather that. Whereas if you're just Jim selling his house,
right,
a buy down hits you directly in your wallet. Whereas for a builder, it's sort of diluted across multiple projects. Is that an oversimplification? Because I hear that mentioned a lot.
No, that's about right. In the large publics, they get to do that even more than most of the homes in this country are built by members of the National Association of Home Builders who build less than 25 homes a year and have less than 10 employees. Kind of true small business.
Interesting.
Yeah. And so, but the big publics, a lot of them have captive finance companies where they can do a deal.
I want a captive finance company. That sounds awesome.
Yeah, right. I'd like my own captive finance company. It's So anyway, so that's the challenges, and we really expected a much better year this year. We thought there's a lot of optimism coming after the election. Our members remember President Trump's first term, a lot of economic growth. But, what we've seen in the first couple of months here is the talk of tariffs, obviously immigration policy. We haven't really gotten off on that big foot yet. And we're just starting to see the deregulatory aspect of the Trump administration. And I think that helps us down the road, too, with lowering those costs.
Well, let's dive into that then. So we've got tariffs. It's April Fool's. Please tell me it's a joke.
It's not a joke, unfortunately.
All joking aside, tell us your thoughts on this. I mean, I think I watched something with you talking about, and this may have been before the numbers, but that tariffs on lumber could be as high as 40% when you add it all in. Am I wrong on that? Give it higher. Okay. Give us the breakdown on what you're seeing and what this will cause. So both of you, by the way, jump in wherever.
Yeah, sure. I'll start. I think tariffs are inflationary. I think that we would prefer, open trade, right? So our members, the business can make an economic decision based on the best products and the best prices to build a house as affordably as they can for their customers. That's plain and simple. But the president ran on tariffs. He keeps his word. He's telegraphed, on and off, right up to the brink, and pulled back aside. He said he was going to impose tariffs. We've already seen him on China. We've now seen him on cars and aluminum and steel. So now the next foot is going to drop on Liberation Day, or whatever we want to call it. So we're bracing April Fools. And the reality is that tariffs are really there's 3 ways these are going to get absorbed. One, the building materials companies aren't going to raise their prices, and they'll absorb the tariffs. Well, that eats into their bottom line.
That's not happening.
No.
Okay. What's the other 2?
Second, the builder absorbs the tariffs and it eats into their bottom line. Or
they're not the march of dimes.
And third, and most likely, it's going to get passed along to the consumer in higher prices.
You're right. Yeah.
What is the percentage? Because I saw an interview you did; it was up to 40%, and then Ken, you were putting your hand up saying it's going to be higher overall. Where did those numbers come from?
Yeah, I mean, this has been the hard thing with the on again, off again. I mean, and to take a step back, there are existing tariffs on Canadian lumber, set about 14.5% now, which is always without getting into the machinations of different types of tariffs. Every year, regardless of what the president decides to do, the Commerce Department and the U.S. Trade Rep kind of review those rates, which we expect will go up even further, and that's meant to kind of counterbalance whatever perceived subsidies that the U.S. thinks Canada is putting into the lumber industry. So even without the president doing anything, we're looking at potentially 25 to 30% by midsummer, and then if we layer another 25 on top of that, we're at over 50. And then you get into the complications of, a value added tax, and is that really a tariff? And there's just a lot of unknown, it's the old Rumsfeld known knowns and unknowns and those type of things. That's kind of how we are with tariffs. But, we get 30% of our lumber imported roughly. And of that, 85% comes from Canada. So, picking a fight with the Canadians is not necessarily helpful for the building industry. And then, our partners, think of the other big inputs like, drywall comes largely from Mexico. Jim mentioned steel and aluminum. I mean, that's everything from nails, screws, stuff on trusses to your appliances that are going into the house. I mean, we've often said, there's not a room in the house that's not impacted by tariffs, right? Whether that's, the flooring, you name it. So we've surveyed members. We put out our housing market index, every month. It's kind of a confidence index with builders that we survey. And the first real survey post our show in Vegas, where we kind of got the anecdotal evidence from a lot of our members, was, they were estimating. And again, this was a month ago when we flirted with this the first or second time, roughly $7,500 to $10,000 on the cost of a median new home. So that's real money.
That's serious money.
That's your point, Keith. We're not absorbing that in margins, right?
Right.
And that's going to get passed on to the consumer. Or what I think we really are most concerned at, back to overall housing supply and affordability, how many of those projects are going to get put on hold, or are buildings going to wait? When we need to be building, when we're behind,
we're already short
millions of units that we should be building overall. Those projects just don't ever start because of the uncertainty that we've been in. And so to me, that's the real danger in tariffs is that uncertainty factor and what it does to kind of overall builder confidence to go. I mean, our guys are small, they're small businesses and they're risk takers, but they're going to take calculated risks. And if you don't know what goes into the calculation, that makes it really hard to go out and,
you'll just wait, right? You let the dust settle.
Yep.
And remember, we talked about the Great Recession. We were at one point, I think 2004, 2005, we were building over 2 million units. And we all know that was quite frothy. And so the lessons of the Great Recession, you had a lot of builders that went out of business because they overextended themselves, sitting on a ton of land, because the good times were never going to end. We're just going to roll through the 2000s here, making money hand over fist. Of course, gravity always works.
Right.
And so now you have members who aren't willing, or builders who aren't willing to get overextended. So they are, like Ken said, they are going to hold back, not take a run at this is temporary. They'll just pace themselves. They'll build 20 homes this year instead of 25, but it's better than building 30 and getting burned.
So I actually that's okay.
Good.
Thanks, James.
Yep.
Jim, I wanted to ask that because I sensed the difference in the builders post the recovery after 2008. Historically, they were like wild, like, risk on, let's go, swing hammers with abandon. We might have a bad year. We won't have 2 in a row. Let's go. Right. Yep. And then 2008 happened, and all of a sudden they were cautious and calculated and didn't seem to rush back in. And that, I thought that would stick for a while. And then, cultures are hard to change in an industry. You sort of are what you are. But that was such a systemic shock that it seemed like it changed from an outsider looking in. So I'm asking for your opinion, but it seemed like it changed the entire behavior of most of the industry.
Yeah, I agree. I think credit got a little bit tighter and harder to, coming out of the Great Recession. It's harder to go get. So our members use acquisition, development, and construction loans, primarily through community banking.
Right.
And that just got harder to do in the wake of the Dodd-Frank law. Right. Just banks were tighter with the lending, which means that the oil of the industry or even the fuel of the industry got very constricted. So, and then I think it's just the psychological shock. And you've got the next generations are coming online now, right? And so they remember what their parents and mom and dad went through in the Great Recession. We're not going to do that. And I've got more builders saying I'd rather build 20 homes than 25 because I know I'm safe at 20.
And it doesn't sound like a lot, right? I'd rather build 20 instead of 25, but you scale that across thousands of these small to medium sized builders. And all of a sudden that's tens or hundreds of thousands of homes that aren't being built across the U.S.
Because remember coming out of the Great Recession, there was this, we're going to be a nation of renters. Nobody wants to buy anymore. They all got burned, right? Okay. I'll give you 9 months of that sentiment.
Sure.
It's year after year, survey after survey, 75% of respondents want to have their own home. They aspire to ownership. Their parents did. It's home ownership.
It's the largest generator for wealth in the United States.
It's the gateway to the middle class. Exactly. It is. It is it's not your 401k. It's not your pension. It's not your savings account. If anybody even has savings accounts anymore, it's ownership. And so that will always be there.
Hey, Ken, I want to ask you what you can tell us. What are the conversations like in DC right now around these things? I mean, you're obviously, your job is to influence and talk with people about policy. Nothing we've talked about in so far, unless I'm misreading the conversations, good for housing. So what is that like? Who are you talking to? What's that process look like? Just because I think I find that the industry doesn't understand how powerful advocacy is. I even hate that word advocacy to some degree because nobody understands what lobbying, meaning we're talking with people and influencing them. But give us some background on what's happening in DC with these conversations.
Well, advocacy is a word we invented for when people ask us on an airplane what we do, and we don't want to say that we're lobbyists. But it's actually really rethinking of kind of the holistic approach to it, right? It's not just the days of just sending somebody up to the hill and doing the shoe leather, which is still important by itself, is not effective. You have to have kind of this holistic public affairs, the influence of political action committees, grassroots, which we've got a great membership, and the realtors and a lot of other folks in housing have a lot of people who are willing to weigh in. So back to advocacy, you kind of have to have that holistic view when you're talking to members, both back in the district and in DC. Listen, we started off on kind of the Johnny Raincloud of Tariff Liberation Day or whatever, but there's a lot of tailwinds out there too, right? Jim mentioned deregulation, and I think we can have qualms with maybe the way Elon Musk and Doge has kind of approached it out of the gate, a little chainsaw-y versus scalpel, but there's a lot of stuff that keeps our guys up at night, that just frustrates the hell out of them, that that keeps them from going forward with those projects, because of added cost or added frustration or added timeline, which time is money and cost. That we really think we've got an opportunity to take a shot at, and maybe a very unique opportunity given this administration. So we've tried to lean in on that with both the administration and with folks on the Hill. We can get into it later. I mean, we got to finish a tax bill by the end of this year, which has huge implications for real estate, whether you're doing single family, multifamily, or commercial. And so I would say the general gist is the administration is certainly driving the agenda right now, right? I think there's, the president takes a lot of oxygen. He did the first term, even more so this term, but they're much more organized in how they're approaching things, whether it appears that way on the outside or not. What's been interesting, I think, is Congress has been I think a little slower to react, and especially on the Republican side, less willing to maybe challenge the administration, at least at this point, or at least publicly. I think they are behind the scenes. And so you've seen a little bit of a shift in the approach to advocacy too, of the old mantra of like, we're showing the flag, and how we kind of approach the members. Members always ask, well, what are you doing on this? The old, like, let's send a letter to the administration saying, here's our point of view, may not be as effective as it was in previous presidencies, right? And so there's a lot of meeting behind the scenes with members making the case, whether it's on tariffs or other issues. But there is a recognition, I think, across both parties. We saw this during the campaign. Housing was a top tier issue. First time in the 20 years I've been doing this.
Finally.
Both presidential candidates were talking about housing down to the city council level. Housing affordability is a kitchen table issue. We've all got friends in their 20s and 30s who think they will never be able to buy a house even if they want to. And that drove a lot of the, I think, dissatisfaction that, quite frankly, helped get President Trump reelected. And so, we've been trying to make sure that momentum of putting housing first on the economic agenda isn't lost amidst all of the other noise of DOGE and tariffs and, whether we're buying Greenland or whatever we're doing there, right? Like, so prime real estate, maybe we have a chance. Maybe that's the next development play. But it's it really is incumbent on us and our brothers and sisters at the other trade groups to really make sure that they're still talking about housing. Our chairman actually today was up at the Small Business Committee talking about all those regulatory barriers. We say 25% of the cost of on average of a single family home is tied up in regulation at all three levels of government. Multifamily, it's north of 40. So you've got to have some wherewithal to go out and be the risk takers that we talked about, right? With that overhang.
I got a follow-up question, and it's just us. Don't worry, no one's listening. Okay? It's just us.
Just for you.
Just for me, because I'm very curious. To quote the Hamilton play, yeah, you guys are in the room where it happens, right? Yeah. And so for those of us who have never been in those rooms, what would we be most surprised by about sort of how the sausage is made? Like, I assume no one's showing up with briefcases full of cash. Well, that would be cool if you would say that into a microphone. But what is that really like? Like, walk us through, like, get us behind the curtain and tell us, like, what really goes on in these rooms? Is it super boring or is it interesting? What's it like?
I'll start, Jim, if you want to jump in. First of all, we both have teenage daughters who are Broadway fans, so I appreciate the Hamilton.
I got one too. Yeah, mine's 13.
I think, and especially we see this, when our members come in for our fly-ins, folks, the first time they come to DC, I think the first surprise for everyone is that the town is largely run by 20 and 30-year-olds. It is young staffers on the Hill who are working really long hours for crappy pay. And they're the ones that really, are really making the place run. And that's not a knock. That's just the reality. And it has been that way for a long time. I think the other thing people don't realize is just how much is on members of Congress's plate. Even if you sit on a committee of jurisdiction, housing issues largely go through financial services or banking. They're dealing with the SEC, with crypto, with insurance issues, with, you can go down the long list of things that come before that committee. So again, we need to be there to put in their brain housing and make sure it's attached in some way on any given day, but they may be running, that's just the committee, right? They could be talking about all kinds of other issues throughout the day. So I think the attention span shortness is probably the most surprising, but kind of who is staffing it and how that's run. But largely, my biggest takeaway in the time that I've been doing this, and despite as partisan as it has become, and especially the last probably 10 years, is most of the people that are here, the elected officials, the staff, they're here for the right reasons. You may disagree with their ideology or their viewpoint on their reasoning, but they're here because they came to serve. They came to, make the country a better place, however they envision that. And I think just kind of the way the caricature of politicians and staff, whether that's on social media or the internet or whatever medium we have now, podcasts,
hey, take it easy.
is largely misplaced. I mean, I think that, the days of the Republicans and the Democrats going and having a beer after they got done negotiating stuff, that doesn't really happen as much as it probably did when Jim and I first came to town.
And should still, by the way.
Is that a problem, though? Isn't that a problem? Like,
it is a problem. Yes, it is. And I think you see better relation when people used to be members would bring their families here. They would, their kids would be in school together. It was hard to, scream at each other when your kids are on the same little league team, right? Or the same school, although, maybe little leagues changed too. The last 20 years. But yeah, though I think the amount of time that they, you want them in the district, but they spend a lot of time fundraising. They spend a lot of time trying to get on, cable news hits, trying to do a lot of the social stuff.
TV drives
and it takes away from kind of that camaraderie. It still happens, right? If you're ever here for the congressional baseball game or some of the other things. I mean, there are moments of hope in terms of bipartisanship, but it's not as widespread as it used to.
I want to bring this back real quick because there are two questions I really want to get answered as well that you both can jump in on here. So, because these are topics that we're hearing about, and obviously it's front and center. And I think, Ken, it relates to some of the conversations you're probably having on the Hill as well. So I've heard some builders talking about, just sort of immigrant labor and deportations and how that might affect the cost of housing. I'm bring both these questions I'm going to bring in, and you guys can answer them however you want. So I'm really focused on this cost of housing thing, especially with this idea that we're building less. It's just going to make things be more problematic as it is. Keith and I both live in Northern California, where it's one of the most expensive places to live on planet Earth. And I can't even comprehend how high housing prices are here.
Yeah, it's dumb. So
is that a thing, first of all? Because I've seen mixed opinions on that. And my follow-up is, this is going to be two-tiered. Is there conversations going on about how we build houses with materials from just, I've seen 3D printed stuff that can be potentially more affordable to build. Should we be thinking about that from a climate perspective? I'm not saying anything about global warming or climate change. Don't for anybody freak out, but we are obviously having a lot of problems and we've got fires and hurricanes. And so I want to just talk around the idea of labor and then materials, like what's happening in the construction world that can deal with some of these changes that are coming.
Yeah, I think in natural disasters, I think we're rivers of blood and locusts short of a full plague.
We've got Hamilton and a biblical, revelation.
Dogs
we're
and
covering
cats
all the
living
bases
together, real wrath of God type stuff.
Sounds like
the Ghostbusters reference for all my non-Gen X.
I got you.
I appreciate that. Thank you. You should. Ken's younger than I am. Not as handsome, but younger than I am. I made some reference today. He's like, no, I got it. So I tend to use pop culture, and I get a lot of glassy eyes.
Right there with you.
Yeah. So to go to your first question, which is about labor. So the four biggest inputs into home construction: land, labor, building materials, and then regulations. So, and just for some context, 24% of the cost of a single family home, 41% of the cost of a multifamily unit are embedded in regulations at all three levels of government. So every level of government has a responsibility to lower those. We're not anti-regulation. I'm anti-bad regulation and excessive regulation. So we at the National Association are working hard to get the federal portion of that stack lowered, whether it's in land development, energy efficiency, things like that. But it's the local level, and it's the darn NIMBYs out there, the people that got theirs and you don't want anybody else to have theirs now. Right. That's where we need lawmakers with actual courage to go to the county commissioner meetings or go to the town hall meetings and stand up for housing and more supply rather than standing up for the people who don't want to wait in line for Starbucks anymore. And that's the challenge.
But it's like, not to be like a Debbie Downer here, but like if we're counting on the solution for affordability or for this to get better is at the local level to get reorganized at scale. Like, good luck. Like that's how.
But that's where land use is done. I mean, the president may want to turn over all the BLM land he can.
Sure, but that's in the middle of nowhere and no infrastructure, and it's going to take decades to build it out.
No, that's right. I mean, it's he's kind of hanging his hat on that for a little bit, but he gets the land equation right. Trump's ultimately a developer,
sure,
right. But I would say that you're absolutely right. The local governments have to be the ones that unlock the land and be willing to grow, and but they're responsive to their current voters, not responsive to their future voters.
Right.
When 40 people stand up at a town hall or stand up at a county commissioner meeting and they're beating on the home builder because they don't want to build 20 more units, and that's the challenge. So,
the people who would go and say the other side are probably working their second job while they're having the meeting. It's the people who built the house and bought it 20 years ago who have the free time to go to the meeting and complain about this, putting a Costco in or the development project.
Yeah, I mean, people have to recognize if you want your town to grow or your city to grow, and you want to encourage and you want to bring economic activity in there, you better have a place for those workers to go home at night. And I travel over the country in the areas that are attracting businesses. Those new businesses, the second question they ask of, hey, what are the tax breaks for me to bring my new factory here? Or where are my workers going to go, and can they afford to live here? And if a locality can't answer the housing equation, they're going to go, the companies are going to move their facilities to somewhere else. We're seeing that, Intel put their big new chip factory outside of Columbus. Well, guess what? They're so far behind on the housing that's needed for that chip factory, and because Columbus had no idea how they were going to build housing. Now everybody's lost their mind. So housing is an integral part of, you all are in California. I don't know how you do it.
We don't.
California is the fifth largest economy in the world, and it's got the worst housing affordability. No wonder you all lost a congressional seat. I mean, California hasn't lost, since 1849. California hasn't lost population until this year.
We are well aware of it. Talk to me about the immigrant part, though, the labor part of it. Is it an actual fact or not? That because I've got mixed results from different builders on whether it's an issue or not. So what's your take?
I think it's much like our trade in building materials. We get a lot of our labor from over our borders because we have done a terrible job since the 1970s of encouraging young kids to get into the skilled trades. And you got to go, if you want to be successful in America, you got to go get a 4-year degree. Well, now they're a dime a dozen, and you're saddled with hundreds of thousands of dollars in student debt. We have got to change that mentality that the trades they're not plan B for little Johnny who couldn't make it in college. They are plan A for somebody who actually if you've hired a contractor in the last 10 years, they're making more money than anybody who's graduated.
Oh my God.
Right now.
Yeah. Even handymen.
Right. But so until we solve that and we are training the next generation in the numbers we need, we have got to go over our borders to get workers. Roughly about a quarter of the construction labor writ large, not just home building writ large, is immigrant labor. About a third of the skilled trades are immigrant labor. Wow. It is an outsized portion of our labor force, and yes, it is a big deal.
It's interesting because when I talk to people about this, and I'm not getting to get into the politics of it all, I remind people that despite the comments which are completely valid, by the way, about our state of California, people forget that 1/5 of all produce is produced in this state that you all consume, for listeners and viewers. Yeah. And it's a big conversation here constantly. But to your comment, Jim, like the immigrant labor that helps make all of this happen keeps your food prices down. Unless y'all want to pay $15 for a head of broccoli. But it's a complex conversation that I think people are not taken into the whole mix.
American kids don't want to go roof a house in Vacaville in August. No, that's the reality of it, right?
That was a very good pull.
Yeah, how about the geographic diversity there? That's pretty good.
Just because it's not interesting if everybody agrees on a podcast. Okay, Let me take the other side of that, and you guys shoot holes in what I'm about to say. But since home builders pretty much have always talked about labor and issues with labor, even when there weren't issues with labor. And yet they managed to figure out how to get homes built, right? And so, whereas I think produce might actually be a bigger problem, there isn't the margins in the farming industry that you have in the new home construction industry, right? Better margins. Could they absorb it? Could they figure it out? Like, I get no one wants to like say, yeah, we're cool with making less money, and they probably won't make a lot less. They'll pass it on to the consumer. This doesn't solve the affordability problem. But builders aren't not-for-profit businesses. They're for-profit businesses. And historically, they've figured it out, right? The homes get built when demand is there, and homes don't get built when demand isn't. Why would this be different, I guess, is my question.
The lack of labor makes what limited labor is more expensive, and there where there's less of it, so cycle times are much longer.
Got it.
20
so
years
holding
ago,
times longer. There's a carry-on effect.
You could build a house in 3 to 6 months. Now it's 9 to 15 or 16 months. I mean that's where
24 in California.
Yeah, that's right. And
Keith, that gets back to solving the affordability of the supply issue, right? If we're not building at the clip that we need to be building because we don't have the workforce to do it, then we're never going to dig ourselves out of the hole that we've created over the last decade. So, I mean, that's one thing NAHB's been focused on, irregardless of the immigration debate, is how do we, we have our affiliated Home Builder Institute, like it goes out and works with programs like Job Corps, and we've got a bunch of different training programs around the country of how do we train that next generation? Because the other reality is a lot of the skilled trades folks are nearing retirement, right? And so the small town I grew up in, the plumber was the richest guy in town, and when he retired, he had nobody to hand the business off to, right?
Yeah, that's fair.
So that's just the guy that's maybe he's helping with the new construction, but coming to fix your toilet. We start losing some of those folks into retirement and everything else. It exasperates the problem. So we're pushing legislation in Congress called the Constructs Act to help with more training in schools and vocationals. Nice. We're again out there on the training programs, and you mentioned ag, hospitality. There's a lot of industries that have kind of direct visa programs. And if we're not successful, or if we can't get the capacity to Jim's point of somebody climbing on a roof in August, do we have we'd love to see a construction specific visa program, right? That comes in and helps supplement that, right?
Smart. I mean, you're right. They don't have they don't do auto class anymore in schools. Right. And there's no shop class in schools. So
another casualty of the Great Recession, when land values fell and housing collapsed, all that tax revenue went away, and governments abandoned all their VOTEC training in order to focus on, the skills they think they need to get to. Labor is the single biggest drag on our industry and our ability to build the 1.5 million units. It's not interest rates. It's not tariffs. It is labor and the inability to have the right workforce.
And I think you hit on a really good point, Jim, it's the come along effects that come with tight labor. Right. It's the delay in construction, which now means your carrying cost goes up 60 or 90 days. It's it's all these other, it's not just, look, if you give them another $4 an hour, someone's going to show up and swing a hammer. Right. That's pretty easy to solve. Right. But the come along effects of that is what I think it's under discussed. Yeah.
We'll wrap on this, guys, real quick, because I just want to get your take, because you do this big show. On a lot of the keynotes I'm doing around the country, I've got this stat: about 9% of people are paying more for insurance than mortgages. There's a lot of data in that as well. But talk to me about construction, just something new and innovative that you're seeing to bring the cost down, or deal with how we deal with this in California, in North Carolina, like just the climate changing, fires, floods, etc. Are we thinking about construction differently in the future as well, on how to make houses more resilient for these changes?
Yeah, you're starting to see more resilient building products come in. Things. I can't think of the product top of my head, but it will come to me. Hardy Plank, James Hardy. Their siding is been recognized as fire resistant, if not fireproof. And so when you take into fact the landscaping around these houses, and you move things back and you remove all of those, the things that are able to transfer embers to roofs, and you make roofs made out of material that won't burn. That's what we're going to have to do more of. The problem is those are still expensive right now. We've got to get those products into the marketplace so the prices can come down and we can build affordably. because it's not even insurance affordability at the moment as much as that is the problem. It's availability. You know that better than anybody in California. With, until the insurance rates can go up high enough where the insurance companies can make money, again, to your point earlier, their businesses, or at least cover their risks. They can't even get insured in some places in California. So we've got to have a come to Jesus, because insurance is going to be the biggest issue facing homes, whether it's in the Southeast, it's floods in the Midwest, or it's fires in the West. We have got to solve the insurance equation pretty darn quickly, because it is becoming untenable for people.
Yep.
And they're locked in.
Yep. All right, Keith, take us home.
Last one, quick one. I feel like I'm sure there has been technological innovation in the home builder space, but like the fact that we don't have a robot roofer that doesn't mind getting on the roof in August because it's a robot. Like, we're on the brink of this AI revolution. We've had the internet, we've had mobile phone, like we've had all this technological innovation. And from the outsider looking in, I see very little of that in the construction space. Why?
Yeah, the greatest technological advancement in home building in the last 20 years has been a nail gun.
Right. Like, what the hell? An air compressed nail gun.
We're building the homes the same way we did since we moved out of caves, right? We build them stick by stick. And we are seeing more offsite construction, panelization, where you're going to build the walls and the roof trusses in factories, and you're going to ship them in 4 pieces. You're going to bolt the corners together, which helps your labor problem, by the way. Less people, less trades on a job site. Excuse me. And so we are starting to see that, but that's a chicken and egg problem. You've got to have the industry take up that technological advancement of panelization in order to build more panelization factories. And so we haven't quite got there yet. You talked a little bit about extruded homes and 3D printed homes. That's weird. That is going to, it looks more like an igloo at first than it does a home that it's going to take courage in home builders to experiment with these new technologies, boxable, whether you can be truly modular, you plug 4 rooms together and create a house. It's going to take some time for us to do that. And it's going to take customers willing to be that first person on the block to say, hey, I'm going to try a modular home. Yeah.
Or affordability gets to the point where it becomes palatable, right? If you could bring that to market at a price point, then magically, I think human beings.
Yeah, think to Ken's point, and I know we're running short on time, but to Ken's point about for the first time in any of our careers, both presidential candidates not just talked about housing on the campaign trail, but a housing supply is the answer. Because we finally broke housing in this country. Like, that's the problem. We finally broke it. Congratulations, we win. Yay. And now we better figure out really quickly how to put it back together.
It's a great way to end.
Gentlemen, thank you so much for being here. That was really, really insightful. Learned a lot today. I know our viewers and listeners will love this conversation. And I also want to go to your national conference. I'm going to attend because I've never been. So
you have to.
Can I go?
I just realized I've never been. I go to all these real estate events. I'm like, why haven't I been to that? I want to go.
Oh, yeah. You got to come to IBS. It was awesome this year. We're in Orlando next year. We'll be in Vegas in 2027. But we'd love to have you. I'd love to have you do a podcast live from the show.
Well, you know what? We'll take you up on it. It'll be fun to do. So, all right, gentlemen, we appreciate it. Thanks so much.
You got it. Thanks.
Talk to you soon. It's our job to say out loud what everybody's only thinking to themselves. It's your job to subscribe to this podcast so you never miss an episode.